Good morning, everyone. I'd like to welcome you to the Audit Committee meeting for, I think it's Wednesday, July 20th, 2022. My name is Paul Russell and I represent Lower Sackville. It is 10:03 a.m. and I'd like to call the meeting to order. I'd also like to acknowledge that the Halifax Regional Municipality is located in Mi'kma'ki, the ancestral and traditional lands of the Mi'kmaq people. The municipality acknowledges the peace and friendship treaties signed in this territory and recognizes that we are all treaty people. And as is standard with these virtual meetings, I'd like to go around the room virtually and just make sure that everybody's camera and mic are working. So let's start with our resident member, Carolyn Duchesne. Good morning.
Good morning.
Good morning. Councillor Daigle Gammon from District 1. Good morning.
Good morning, Mr. Chair, colleagues, members of the public. Thank you for being here today.
No problem. Councillor Hensby, District 2. Good morning.
Good morning, sir. Here and accounted for.
Good stuff. Councillor Purdy from District 4. Good morning.
Good morning, Mr. Chair. Good morning, everyone.
Councillor Cleary from District 9. Good morning.
Good morning, Mr. Chair, colleagues. Joining you on my phone at the moment. I've got a bunch of dots swirling in a circle on my computer for about 15 minutes as it reboots. So I'm not sure what that means, but I may or may not be joining you again in a few minutes on a different camera.
Okay, maybe upgrade to a Windows computer. Councillor Morse from District 10. Good morning.
Good morning, Mr. Chair. Good morning, everyone. Happy to join you from Clayton Park this morning.
Oh, good stuff. And Mayor Savage, good morning.
Morning, Councillor, Chair. Nice to see everybody.
And let's go with the external auditors for a second. Carrie Blair, good morning.
Good morning, Mr. Chair.
Good morning. And Rebecca Struthers, good morning. We didn't hear you.
Oh, good morning. Can you hear
There
me?
we are. We
Yep.
can hear you now. Good stuff.
Perfect.
We have heard from Dave Harley prior to the meeting. So Jerry Blackwood, good morning.
Good morning, Mr. Chair. Good morning, members of council, Mr. Mayor.
Good stuff. Good morning. Okay, so thank you very much for that. Technology is always finicky. The next item on the agenda is the approval of the minutes of March 9th of 2022. This was our last audit committee meeting. So could I have someone move the approval of the minutes of March 9th, please?
I so move.
Thank you, Councillor Daigle Gammon. Seconder?
Second.
Councillor Purdy, thank you very much. Are there any errors or omissions? Seeing none, all in favor of the minutes, please signify by saying aye.
Aye.
Aye. All opposed, say nay. Great, thank you. The approval of the order of business and approval of additions and deletions. Annie, good morning.
Good morning, Chair. The clerk's office did not receive any requests for additions or deletions for today's meeting.
Okay, thank you very much.
Move the agenda circulated.
Thank you very much, Councillor Hensby. Do we have a seconder?
Second.
Thank you, Councillor Morse. Are there any changes from committee? Not seeing any. All in favor of the agenda as presented, please signify by saying aye.
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 All opposed, say nay. Great, thank you. Call for declaration of conflict of interest. And not seeing any. Okay, thank you. The next item, the big item, is the year-end financial statements and fourth quarter financial report. For this, we have a couple of presentations. First, an internal presentation, and then the second would be from the external auditors. Jerry Blackwood, would you mind leading us off?
Thank you, Mr. Chair, and good morning, and welcome members of Regional Council and our independent members. Carolyn, I don't know if Claude has joined the meeting yet, but welcome, as well as our external auditors from KPMG, Rebecca and Carrie. This is typical of past years' order of business here. So Dave Hurley, our Director of Financial Reporting and Accounting, will kick it off. He's going to do a presentation and walk you through our year-end financial statements and our trust accounts. And that will be followed by Carrie and Rebecca, who will present the audit findings report. And as per past years, would suggest that the audit committee take the time to go in camera with the external auditors as best practice and around governance and fiduciary responsibility to ask any questions without staff present. So with that, I will turn it over to Dave for the presentation on the financial statements. Thank you.
Thank you very much, Jerry. Go ahead, Dave.
Thank you very much. As Jerry mentioned, I'm Dave Harley, the Director of Accounting and Financial Reporting, and I'm here to take you through our year-end financial statements and our fourth quarter report. So next slide, please. So starting here, we've just laid out some of the governance and responsibilities in regards to HRM management, the committee itself, and then KPMG, our external auditors. Next slide, please. And as we are an entity with consolidation of our financial statements, so we've just listed the different entities that we consolidate into our year-end financial report. Next slide, please. So just some quick highlights on our consolidated financial statements. We are expecting to receive an unqualified report from our auditors. We've had to make no audit adjustments and no management letter points, and we do prepare our financial statements in accordance with GAAP and the public sector accounting standards. Next slide, please. Just a brief walkthrough of the makeup of our financial statements. So we start with our management's responsibility letter and our independent auditor's report, followed by our various statements, and then the notes to the financial statements, where you'll find the majority of the information that makes up what's in our financial statements. Next slide, please. So we're going to start today with our statement of financial position. This statement highlights the position of the municipality as of March 31st, 2022. And it kind of highlights four key figures: our cash resources, our net financial asset position, our non-financial asset position, and then finally the accumulated surplus of the municipality. Next slide, please. So here you can see our financial assets total $964 billion, million, compared to 808 million in the previous year. Our financial liabilities are 500 million compared to 397 million, which leads us to a net financial asset position of $464 million compared to $410 million in the previous year. Our non-financial assets, primarily made up of our tangible capital assets, are $1.8 billion, which is just a slight increase over the prior year. And all of this leads us to an accumulated surplus position of $2.4 billion this year. And we'll have some explanations for these on the following slides. So next slide, please. So looking at our financial assets, we can see our cash has decreased significantly from 2021 through to 2022. A large portion of this is actually made up through the classification of our investments. So investments that are due within 30 days, or sorry, that will become back to us within 30 days, are 90 days, sorry, are classified as cash on our financial statements. So that's really part of driving the big decrease compared to the prior year. Prior year, we had a lot more of those investments were coming due sooner. So you can see we've had a large decrease in our cash and cash equivalents, but also a large increase in our investments over the prior year. Taxes receivable are pretty much on par with the prior year, slight decrease. Our accounts receivable has increased, and you can see the details for this in note 5 to the financial statements. Largely, this increase is just due to the timing of the receipt of receivables, so there's nothing untoward there. We've had a decrease in our land held for resale due to sale of business park lots over the year. And finally, our investment in the Halifax Regional Water Commission has increased. That's due primarily to a remeasurement of their defined benefit plans over the course of the year. Next slide, please. So when looking at our financial liabilities, in terms of our accounts payable, again, this is largely related to the timing of payments and specifically payroll. So the timing of our payroll payments has caused the large increase there. Our deferred revenue is largely due to increased receipt of early payments from the interim tax bills this year compared to prior year. Employee future benefits has had a slight increase due to the increased liability for the retirement allowance and long-term disability pension plans. Solid waste liability has decreased due to an estimated decrease in closure and post-closure costs. And our long-term debt has increased. This was due to the previous year's fall debenture not being received in the prior year, but until May of 21-22. Next slide, please. So our tangible capital assets have, we've added about $176.3 million worth of assets in this year. Primarily, this was in roads and infrastructure, which we increased by $62.3 million, buildings by $26.6 million, and machinery and equipment by $26.4 million. All of these increases were offset by an increase in depreciation of $140.4 million. Next slide, please. So now we're going to move on to our statement of operations. This is the consolidation of the revenue and expenses of the municipality, including all of those consolidated entities. So expenses are shown by the type of services provided as required under FRAM, and expenses by object, salaries, interest, materials, things like that are shown in our schedules of segment disclosure at the back of our financial statements. Next slide, please. So looking at our revenues, you can see we've had an increase in residential or in taxation, and this is driven by an increase in residential taxes of $11.3 million due to the average assessment growth of $1.3 million, with a 0.3% decrease in the tax rate in the prior year. Commercial taxes had an increase of $2.9 million, again due to the average commercial assessment growth, which was 2.6%, and was offset by a decrease in the tax rate of 1.6%. Mandatory education area rate has gone up by $5.4 million, and the Metro Housing Authority by $1 million. The biggest increase we had was in D transfer tax, which was up $21.8 million due to increased sales activity in the market. Moving on to user fees and charges, we did see an increase this year as we saw a rebound in transit fares as ridership returned post-COVID. We had increased revenues in our ABCs, again, largely due to return to normalcy after some of the COVID shutdowns in the prior years. So recreational fees were also up. We saw increased fees for parking meters and parking rentals and marketing levy as well. Building permits continued their strong growth last year for about $1.6 million. And then we also had facilities rentals and sales of recyclables, which also showed increases. Government grants are the decrease there is largely due to the Safe Restart Fund received in the prior year, $30 million of which was utilized last year for to offset some of the cost problems or cost issues and revenue issues we had due to COVID. Penalties, fines, and interest decreased due to a decrease in summary offense tickets and fines, as well as interest on taxes. Land sales decrease was due to sales on properties in the prior year were greater, but we did offset this somewhat by greater sales in our business parks. Our increase in investment in the Halifax Regional Water Commission was up. This was largely due to an increase in their operating revenues and partially offset by an increase in their expenses. Next slide, please. So looking at expenses, we've seen an increase of $6.5 million in general government services. This is largely related to grants, including the Rapid Housing Initiative, which was $4.1 million. We also had increased OCC costs of $1.6 million, and then increases in utilities of $1.1 million. We did offset this somewhat by having the election costs in the prior year, which were about $1.1 million. Protective services increased $28.9 million. This was in part due to the accrued amount that we have for the RCMP retro payments of $6.7 million. We had year-over-year increases of $1.5 million there as well. Salaries and benefits were increased in police and fire, $9.5 million and $7.2 million respectively. And we also saw some smaller increases in materials, fuel, and supplies. Transportation services were up $20.8 million. This was due largely to increases in salaries and benefits in transit and public works. And then we also had a sizable increase in transit fuel costs of about $5 million. Winter works contracts were increased over the prior year by about $1.8 million, and we also had increased salt usage due to the winter we just experienced of $0.9 million. Environmental services increased primarily due to an increase in contract services at our solid waste and recycling facilities. Recreation and cultural services saw a slight increase over the prior year. Salaries and benefits increased by about $3.7 million due to an increase in casuals after the issues we had due to COVID in the prior year. This was offset by lower deficits requiring funding for each of our MDFs. Planning and development, we saw an increase in salaries and benefits of about $500,000 and an increase in grants for affordable housing and heritage districts of another $500,000. And finally, education services, the increase there is related to an increase in mandatory education payments of about $5.2 million, offset by a small decrease in the supplementary education of about $450,000. Next slide, please. So after the revenues and expenses that were consolidated, we did end the year with an annual surplus of $49 million. That was down from $73 million in the prior year, which brings our accumulated surplus up to $2.3 billion compared to $2.2 billion in the prior year. And then finally, we have just the remeasurement gain from the investment in Halifax Water Commission. You can find the details on that on note 7. It's related to the remeasurement of their employee future benefits. And so this brings us to a final accumulated surplus position of $2.4 million for the year. Next slide, please. So now we're going to move briefly on to our audited general rate surplus statements. Next slide, please. So this year we ended with a general rate surplus of $29.3 million. We're required to move these funds into reserves at the end of the year. So while we are recommending moving the amounts of $1.8 million into the capital fund reserve to fund future capital projects, $1 million into the MDF reserve to fund capital projects in the MDFs, and then removing the remaining $26.6 million to the general contingency reserve. Next slide, please. So of that $26.6 million, we're asking to move to the options reserve. There's surplus that was identified through our operating budget this year of $7 million, as well as an additional $5.3 million of surplus that was identified on the BAL list during budget that we would be moving out into, we've used to fund operations in the 22-23 fiscal year. And we're recommending an additional $14.3 million of that $26.6 million to be withdrawn in 22-23 as well to fund some operational pressures. Next slide, please. So the $14.3 million that we're asking to be withdrawn at this time, we've already had some that have been approved to be used by council from the surplus for this year, and that includes monies for the Housing Trust of Nova Scotia, a carry forward for the Auditor General's Office, and snow and ice contract increases. We also have the $1.2 million of the Emergency Housing Fund that was not utilized in 21-22 that we're looking to utilize in 22-23, and the Canoe 22 Society grant as well. So all of these are really just procedural issues where we have to put it into the reserve and then get permission to withdraw from the reserve in the new fiscal year. And then finally, we have some unbudgeted pressures that we're experiencing in the current fiscal year that have been identified. So we have $8 million that we're looking to use to cover off fuel and inflationary pressures that we're already seeing in this year. We also have the additional issues of Red Cross building has been approved to be demolished, the RCMP contract increase that was not included in the budget, and then some smaller pressures that we've identified as well to make up that $14.3 million. Next slide, please. Now we're going to move on to our statements for the miscellaneous trust funds. Next slide. So looking at the summary of assets for the trust funds, you can see the majority of those assets are cash that are held within the bank. So as of 2022, we had $7.9 million in cash. That's an increase of $330,000 over the prior year. Primarily due to increased tax revenue or tax sale revenues and sales of cemetery lots in this year. Next slide, please. So this is the summary of liabilities and funds equity, and we don't have any identified liabilities at this time. So we have funds equity of $7.9 million this year, which is up from $7.5 million in 2021. So those are the funds that are available to be used from the for the trusts. Next slide, please. Just a summary of the income and expenditures for the trusts. Income was $457,000, up from $162,000 in the previous year. Again, that's due to an increase in tax sale revenues. Expenditures decreased primarily due to a decrease in tax sale refunds this year, as well as a grant that was paid from the Sackville Landfill Trust in the prior year. Next slide, please. Now we're just going to run through a few reports that are normally included in our quarterly financial updates. Next slide, please. So looking at councillors' funds, of the district capital funds, we have a total budget of $2.9 million for the year. $1.9 million of that was spent or committed by March 31st, leaving $1.0 million available for carry forward to 22-23. And then with district activity funds, there was $72,000 budget, $68,000 of that was spent or committed, and that left $4,000 that's included in the surplus. Next slide, please. With the recreation area rates, we began the year with a surplus of $1.3 million, and there was revenues came in of $0.9 million for the year, with $1 million being spent. So we ended up with a surplus at March 31st for all the different area rates of $1.2 million. You can see details of the specific area rates in attachment 7 of the report. Next slide, please. In terms of hospitality expenses for the year, or for the 3-month period, sorry, we had $19 in total of hospitality expenses, resulting in a year-to-date total of $1,027. Again, a lot of this spending has been curtailed in the wake of COVID. Next slide, please. And finally, we have the expenses for reportable individuals as required by the province. So in terms of expenses for the quarter, we had $8.4 thousand in expenses, and a year-to-date total now of $26.8 thousand. And I believe that wraps up our presentation. So we can move along to KPMG for their presentation of their audit findings report.
Okay, thank you very much, Dave. Carrie and Rebecca, go ahead. Do we have the slide deck for you?
I believe you do, yes.
Okay. There we go.
Our slide deck is really excerpts from our audit findings report that would have been circulated to the committee earlier in the month. Our report is dated as of July 15th, 2022. If you move ahead to the audit highlights page, next page, I believe. Next, keep going. One more. Oh, one more. We reordered the slides some this year. So as highlighted here, our audit findings report is dated as of July 15th. Obviously, between July 15th and today, we have continued to update our audit based on the items that are outlined in the status. So we are continuing to complete our audit quality control procedures, and those will continue through to the date of our audit opinion, which is expected to be upon obtaining evidence of council's approval of the financial statements. All other items on this list are either completed or near completion, and obviously there are a few things that happen right at the end of our audit, which is completing our discussions with the audit committee today. Completing a review of the final consolidated financial statements. We've reviewed the version that would have been circulated to this committee, and we don't anticipate there to be any changes, so that's really there as a matter of course. And as of the date of the final audit opinion, we will get a signed management representation letter. So nothing out of the ordinary on that list, and everything is on track to release, as management had mentioned, an unqualified audit opinion on the date of approval of the financial statements by council. The unqualified audit opinion, a draft version of it, was attached to our report. It's not included in here, but wanted to highlight that. No changes in the auditing standards that would cause a change in that report. So it should be consistent with prior years, other than updating for the required dates. Other item to highlight here that would be included in the report that was circulated is the fact that we've prepared our management independence letter. That letter is dated as of July 15th as well, and it outlines what, if any, matters would potentially cause our position as auditors to be impaired due to an independence issue under our professional standards, and what safeguards are in place to mitigate those. And we have not identified anything that would cause us to be other than independent in accordance with our professional rules. If we move on to the next slide, page, please. I will highlight the fact that this report is a continuation of our audit planning report that was previously committed or presented to this committee, and will provide a brief update on our results of our audit. We do a number of procedures to address the presumed fraud risk from management override of controls, as communicated previously. We've completed our procedures over this assertion or presumed fraud risk, and we have not identified anything to bring to the attention of this committee related to management override of controls. So everything was as expected. Next page. We had a number of other areas of focus, which included tax revenue, user fees and changes, capital assets, payroll expenditures, routine expenses, treasury, and investment in the Halifax Regional Water Commission. We would have highlighted our response to those particular other areas in our audit planning report, and I would communicate back to this committee that we've not changed our response. The procedures that we intended to perform were adequate based on our initial planning and risk assessment, and there was nothing new or no additional information that came to our attention post audit plan that was presented on March 9th, 2022. As a result of applying those procedures, we've not identified anything to bring to the attention of this committee that would constitute either a potential error in the financial information or something else that would suggest there is a matter to discuss with this committee. Next page. So as noted, there's no uncorrected audit misstatements to bring to the attention of this committee. We'd also comment that we did not identify any misstatements that management subsequently corrected as a result of our identification. So nothing to report with respect to uncorrected or corrected audit misstatements. You may recall from our audit planning report that we would bring forward any misstatement that was greater than our audit posting misstatement or clearly trivial threshold. And so from this slide, you can conclude that there wasn't anything that got above that threshold, and I'm not aware of anything that we should or that was below that threshold either. So next page. Just a comment on control deficiencies. One of the common areas that we get asked as auditors is our controls working effectively. Just a reminder that our responsibility with respect to internal controls over financial reporting is to understand the environment, and from that, use that understanding in the formulating our audit plan and plan substantive procedures. We can do procedures over controls if we believe that will either augment or assist in the understanding of the potential for misstatement and the extent of substantive work that we need to do. As a result, anything that we identified from a control deficiency point of view that gets raised to the level of a significant deficiency, we would be responsible to report to this committee. We did not identify any control deficiencies that we deemed to be significant deficiencies in internal control over financial reporting. Also, any other control deficiencies that are minor in nature, we would bring forward to the attention of management. And we do that in the form generally of a management letter that outlines any control deficiencies. And we've not identified any control deficiencies to bring forward to the attention of management through our audit process. Next slide, please. Again, management went through the financial statements. There's been no changes in public sector accounting standards. There's no concerns. There's no new areas of activity that the organization undertook that was require an additional considerations with respect to areas of the accounting standards that haven't previously been applied. So with respect to the financial statement presentation and disclosure, there's nothing that we've come across that we need to highlight or report to this committee that would either be in the form of inappropriate financial statement presentation or concerns regarding the application of new accounting pronouncements. In our report that was circulated, we do highlight that there is a new accounting standards coming next year. Those accounting standards focus on asset retirement obligations and would encourage the committee to review material related to that. We've discussed with management where they are in the process of adopting that standard that became effective on April 1st, 2022. So it would be effective for the current fiscal year, and they continue to work through the requirements and make the adjustments as necessary for the coming fiscal year that will be subject to audit. Next page, please. And that is it. Also included in our report would be information related to new auditing standards. So again, for next fiscal year, auditors will be required to adopt a new auditing standard. Canadian Auditing Standard 315 revised, which deals with the identification and assessing of risks of material misstatement. It's an important change in the auditing profession. It is not inconsequential and not minor in nature, and it involves more diligence and more linkage between the information that's collected at the audit planning stage and how that impacts our audit plan. And you should expect that when an audit planning report is presented for the next fiscal year, that a lot of that detail has been baked into and reported to the committee as to how things are being addressed. The main thrust behind those changes really are changing risk environments, more reliance on IT, so more consideration as to where information technology poses different or new risks in the financial reporting frameworks. And also the innovation of new and automated tools. We've used some of those in our audit of the HRM over the past number of years, including this year. However, there continues to be more technology being developed for the auditing profession, and you should expect to understand how auditors are leveraging that to be not just efficient and effective, but also ensure that you're obtaining a high quality audit that uses the best possible techniques available. With that, I'll conclude our presentation.
Great. Thank you very much, Kerry. I'm wondering if anybody has any questions before we go in camera. For those members of committee who would like to ask questions, please enter that into the chat. Ultimately, we can go in camera pretty much immediately if that is your desire. Go ahead, Annie.
Thank you, Chair. I just wanted to recommend that before moving in camera, that the motion be put on the floor. Thank you kindly.
Fair enough. Thank you. So could we have someone to put the motion on the floor? Mayor Savage, would you be interested in doing that? Yeah, there we go.
I'll put the motion on the floor. I have some questions I think I can ask in public. Anyway, I'll put the motion It's recommended the Audit Committee recommend that Halifax Regional Council approve one, consolidated financial statements to the Halifax Regional Municipality for the year ended March 31st, 2022. Two, the statement of general rate surplus to the HRM for the year ended March 31, 2022. Transfers of $29,348,010 is outlined below to reduce the general rate surplus to zero. Multi-district facilities reserve Q546 $1 million, capital fund reserve Q526 $1.76 million. Four, options reserve Q421 $26,586,610. For the financial statements of the Halifax Regional Municipality Miscellaneous Trust Funds for the year ended March 31, 22. Five, that KPMG continue as the external auditor until the tender for external audit services is awarded for fiscal 2022-23. Six, the fourth quarter 21-22 financial report. Seven, approve unbudgeted withdrawals of $14,286,610 from the options reserve to fund operating shortfalls and pressures in fiscal 2022-23 is laid out in attachment 10.
Second.
Thank you, Councillor Daigle Gammon. Go ahead, Mayor.
So I'm just looking at this. I mean, and so let me ask, who did the presentation? Was it Dave or was it, I can't remember who did the presentation.
Internally, it was Dave. Yep.
What was our budget surplus at the end of 21-22?
Through you, Mr. Chair, to the Mayor. So our general rate surplus was $29 million.
Yeah. And of that 29 million, we had at the budget process allocated some to the operating costs for this year in advance, correct? The 7 million?
We had allocated $7 million of that, plus an additional $5.3 million through the VAL process.
Yeah, so that's 12.3 million. So now we're moving, the suggestion is to move the 14.3 million, which takes it up to 26.6, right?
Correct, yes.
So the thing that concerns me is that this will be forwarded to council and could be brought forward, but it seems to me since budget begins in council committee of the whole, that these decisions should be debated by council as opposed to just audit and finance and then pushed on to council. I'm wondering, Jerry in particular, if that's, you know, this is a significant amount of money that we're now transferring based on a larger than expected surplus.
Yeah, thank you, Mr. Mayor. So with respect to the reserve piece, the amount that we're putting in there is basically things that council has approved that we have funded through the 21-22 surplus. So I think Dave had that in slide 18, right? That broke down the $14.2 million. So all of those items on that slide have been brought forward to council that have been approved or they're basically carry forward. So, you know, the housing trust was approved in council. So council made that decision. Same with the auditor general carry forward and the snow and ice contract increases, right? The unbudgeted pressures that we talked about. So for example, the $8 million, that was spoken very clearly in budget committee around an amount that staff was recommending to put in a reserve to offset pressures. If you recall, as we were closing out our budget process, fuel started to skyrocket, and we decided that we would manage that through our projections this year and to put some money away for that. So that was recommended by staff that we would put that $8 million away when we come back and true up our year end and get our year end approved. That would be a recommended reserve withdrawal. So the other big piece was the Red Cross, you know, building demolition. So that was approved, as well as We were a little bit short on our budget projection for the new RCMP contract. So all of the amounts that we're talking about in terms of reserve have been discussed at council. So basically what we have left is about is like $2.8 million, which we want to top up the multi-district facilities reserve for ongoing capital, and the capital reserve needs some cash.
Right, but Jerry, we didn't vote on them. I remember asking you about what we thought it might cost us extra in fuel, and we were reluctant to put a number on it because we didn't know exactly what the price would be. So, I mean, we wouldn't be approving these today if we'd already approved them through the budget committee, would we?
They weren't necessarily approved, approved through the budget committee. Staff brought forward our projected surplus at that time. And what we, put to council was basically to say, we can fund our BAL items, right, of 5.5 or $5.2 million that came out of the surplus. And then we recommended that there was another $8 million that we set aside out of that surplus that we advised council that we're going to need this year to offset some pressures. So, coming forward in the, our first quarter report right now, I think, between transit and corporate fleet, they have a deficit on fuel of probably around $9-10 million that we need to cover off this year, right? So what we're saying right now is this is the approval process of that $8 million that we discussed at budget committee, that we advise council we should set aside for inflationary and fuel pressures.
Right, but did you say that the Red Cross demolition was approved? Because I don't think that has not been approved by council.
That is part of a capital project, yes.
Yeah, but what I'm saying, Jerry, is that as worthy as all these things are, when we go through the budget process, we argue down to $25,000. Now, all of a sudden, we're approving we're allocating $14.3 million of surplus money. I don't think anybody ever told us we'd likely have a $29 million surplus. In fact, somewhere here it says the surplus is $2.3 million, when that's the 29 minus the 26 point whatever it is, right? So I just think we need to be very upfront about the fact that we had a $29 million surplus. It allows us to fund things that need to be funded, but council, this will go to council. It'll go to council. I'm hoping that we'll have a discussion about it at council. There's none of these things I don't agree with. This is a big piece of money that we're all of a sudden saying, this is where this goes to. So I just think we need to be very careful about that. I have another question, but I better come back. So that's all I'm saying is this: council is the lead on the budget process through committee of the whole. I just want to make sure that council know that they're involved in these decisions up front, as opposed to just after audit and finance. I'm not arguing the process. I know the process is the process that we have to deal with. Just saying it's a lot of money, and we need to make sure we do some good diligence. Thank you very much.
Thank you very much, Mr. Mayor. Go ahead, Councillor Hensby.
Thank you much, Mr. Chairman. I was just kind of wondering how much of our capital budget has not been expensed, how much of a carryover has it been, or how many of the projects have been delayed and not started at all?
Through you, Mr. Chair. Don't have that information with me specifically today, so I will have to come back to council or to the committee with that information.
Just further to your question, Councillor Hensby, when we come forward with our first quarter financial report, we'll have an update on our capital projections and including our cash burn in terms of overall spend on capital.
Okay, would you be, Jerry and Dave, would you also be able to send that to the other two members of this committee, just to make sure that they have that directly?
Yes, we'll distribute it to all members of the committee.
Great, thank you very much, because it would be 6 months before we, as this committee, are able to discuss that. Councillor Hensby, does that address your concerns at this point?
That'd be fine, thank you.
Okay, thank you. Go ahead, Councillor Morse.
Thank you, Mr. Chair. I know Jerry touched on this, but is there anything more that we could, any more detail we could have on the $8 million? That's the single biggest line item, and it's sort of a lump sum fuel and inflation. Is there any more detail on that? And also, could you explain why the increase in ridership and fares and that sort of thing with transit might not be offsetting the increase in the fuel costs? Thank you.
Through you, Mr. Chair. So the $8 million we've identified there, it was based on an estimate of what we had back when we were doing the budget. We'd actually asked that we have $8 million or so available to to bring forward this year to cover off some of that inflation and the price increases that were happening late in our budget process. So we've stuck with that $8 million, knowing that the price of gas is fluctuating and the impacts of inflation are a little bit fluctuating as well. So they're increasing, and we'll be back probably in September with our Q1 report to give you a better sense of what those amounts are. But that $8 million is looking very close to it, just what our fuel increases are looking like at this point in time.
So you're saying we're going to have to add to that?
I'm saying that at this point in time, we're still a little bit unsure because we're so early in the year. But the pressures right now with the price of gas has gone down again a little bit recently, so that number is probably easing off a little bit. But we don't have a good sense of where we're going to finish the year overall. So $8 million is our estimate at this point, but that may change throughout the year as the impacts of the fuel increases and the inflationary pressures become better known to us.
Okay.
And I think.
Go ahead, Dave.
Sorry, go ahead, Jerry.
Yeah, and I would say, as I mentioned before, our first quarter financial report, when that comes forward, we can provide more detail. As I said before, right now, we got a significant deficit on fuel. That $8 million is basically spoken for in terms of covering that off. But we will have in that report more detail on transit ridership and our fee revenues and talking about the pressures that we're facing this year.
Okay, so when it says inflation, it's really fuel.
Yeah, I mean, when we brought this forward during the budget, we were talking about, we had a line of sight on fuel. Our projections at that time were around 5 or 6 million. And we were thinking, we topped that up a little bit, because as last week we had a $2.8 million increase on Keshe Goodman Library capital project, right? So just, having some capacity to cover some of those things off on operating and capital, what we're saying is that $8 million is pretty much going to be trued up through our fuel pressures this year.
Okay, all right, thank you.
Thank you very much, Councillor Morse. Go ahead, Councillor Daigle-Gammon.
Thank you very much, Mr. Chair. Thank you, everyone, for the presentations and for the lovely report to read through. My question actually follows a little bit on the mayor's. He did ask a lot of the questions that I had, but the multi-district facilities, the transfer there for the $1 million, is that over and above what we spoke about at the budget, or was that part of the BAL? I'm just trying to remember, because I know that we did see that we had to add more into the multi-district facilities.
Through you, Mr. Chair, that $1 million is related to their deficit, that their operating deficits from the 21-22 fiscal year. The amount that came forward on the BAL list was additional supplementary funding for their operations of the 22-23 fiscal year. So it's a separate amount.
It's a separate amount. Okay, thank you very much.
Thank you, Councillor Daigle-Gammon. Go ahead, Mr. Mayor.
Thank you very much. Just a question on the deed transfer. It was lumped in with something else. How much was our deed transfer at the end of the year, our revenue?
Through you, Mr. Chair, it was a $26 million increase over budget. So I believe we ended the year around $85 million.
Yeah, and so our budget for this year for deed transfer is 82 million. Was it 80 and then 82 maybe? Just
83 million.
83 million. So we're budgeting 83 million. Okay. And it's not that long ago we were budgeting 35 million for deed transfer, 35 to 38 as I recall. So that's helping to fund a lot of the stuff that we need to do. So let's hope we have another good year in deed transfer. Jerry, there's not much you can do about that, but I'll hold you responsible for it. Not really. All right, thank you.
Thank you. Thank you. Thank you very much, everybody. That addresses all of the questions that have been asked so far. So at this point, if members would like to go in camera, I'd entertain a motion for that.
I'll move it.
Okay, thank you, Mayor. And do we have a seconder to move in camera?
I'll second.
Thank you, Councillor Dago Gammon. All in favor of moving in camera, please signify by, oh, Councillor Dago Gammon, you have another question. I'm sorry, go ahead.
I actually believe it would belong in camera. Thank you.
Beautiful. All in favor of moving in camera, please signify by saying aye.
Aye.
Aye. Okay. Thank you. Annie, just to make sure we jump to the other invitation that we have, we leave Zoom and go into Teams. Is that correct?
That's correct.
Beautiful. Okay. Thank you. We will see you on the flip side. Hello and welcome back, everyone. We have returned from the in-camera session. I'm just waiting for enough members of the committee and staff to return to this meeting, and then we would proceed.
Chair, I can confirm that we are good for both quorum and staff.
Okay. I don't see Jerry. Perhaps he's on his way in. But let's go ahead. So once again, I'd like to open up the floor to folks who would like to ask questions of our auditors or of staff. David, if Dave Harley, if you wouldn't mind just turning your camera on just to make sure that we can see you. There we go. Thank you. And there's Carrie. Perfect. So for any members of the committee, if you would like to ask a question, please indicate that in the chat, and we will proceed with that. I don't see anybody jumping to ask a question.
Well, Mr. Chairman,
session.
I'd assume that once our recommendation goes to council, regional council will be assessing the allocations that's been recommended.
Regional council will certainly have that option. This would go as a report for council approval as opposed to just an information item. We normally send the quarterly reports as an information item, but I would see this one going for approval. So we would certainly have the opportunity to discuss and review with them.
Yeah, because Mr. Chairman, my comment in regards to perhaps we should be looking at appointing more money to the parkland allocation reserve. I think that we have more than enough money in the options reserve to maybe make a small allocation of $5 million to the parkland acquisitions for strategic acquisition of parklands that we're always been discussing.
That is certainly something that we could discuss here or at council. Whatever is your wish.
Well, I assume the debate will be held at regional council, so I'll leave it there. I just want to plant the seed today in regards to staff being aware of this possible request to come forward.
Okay, thank you very much for that, Councillor Hensby.
Excuse me, Mr. Chair, just for a clarification, I just joined and I didn't quite catch Councillor Hensby's question, but it's looking for allocation of $5 million from the options reserve to parkland. Is that what I heard?
That's correct, sir. That's correct.
It is looking for $5 million from the general rate surplus before transfers for the parkland reserve. So it would not go to the options reserve, it would go to the parkland reserve instead. If I interpreted that correctly.
Yeah, so if I may, to just try to clear that up, basically what staff is recommending in terms of with reserve commitments to reserves out of the general rate surplus is what we have left over is basically $2.8 million, right? So I just want to be clear on that, and that's split between the capital reserve is what we're recommending and the multi-district facilities reserve. The remaining surplus is accounted for in things that are either carry forwards from last year, things that have already been funded and things that have already been funded from the surplus.
Councillor Hensby, does that address your concern?
Well, I think that with the options reserve, I think they only talk about $14 million in other commitments and stuff in attachment 10. So I was kind of just curious if there was an allocation surplus there. I think the parkland is one of those accounts that's going to be under pressure because of other acquisitions, be it Birch Mountain Blue Cove or Susie Lake or Sandy Lake, whatever. I was thinking that we should probably have some reserves bumped up for those acquisitions.
Right.
Yeah, and I will say when we come forward at year end to make recommendations to contributions to reserves, we review each reserve and basically look at areas where we see pressures and reserves that are overcommitted. And these are the two that staff has recommended. We feel the parkland reserve based on commitments right now is sufficient, but we'll certainly be prepared for any questions at regional council about that. Thank you.
Okay. Thank you very much, Jerry. Go ahead, Councillor Cleary.
Thank you, Mr. Chair. I was just going to suggest that perhaps Councillor Hensby meet with staff to get all the details he needs, so that if he does want to bring a motion, it's well thought out beforehand. And now, I am on my work computer. It is working now. It wasn't my Mac. It was my work computer, which is PC. So it took an hour, but I'm here on this computer now.
Super. Thank you very much for that, Councillor Cleary. I don't see any further.
Could I ask a question, Mr. Chair? Sorry.
Absolutely. Go ahead, Councillor Daigle-Gammon.
Thank you very much. Jerry, is there one place where we can see that entire 26,586,000? What makes that up? Because I think part of the confusion is seeing that as being moved into the options reserve and trying to, if it's already allocated, right? Where, like, is there a list of where that is all allocated? I did go through the report twice, but trying to match up all the numbers was a little bit of a challenge for me, if I was being honest. So
yeah. I mean, certainly, Councillor, if you want, we can have a call offline. I can certainly walk you through that. But if on slide 17 of the presentation, you look at options reserve transfers, and that breaks down to $26.6 million. So on a high level, so surplus contributed 22-23 operating budget, $7 million. That was the amount of the budget of the surplus that we brought forward last November in our fiscal framework, where we asked council for direction in terms of our fiscal outlook. So we said, we're tracking right now that we're going to have a year-end surplus. We recommend that we allocate $7 million from the 21-22 surplus to help fund the 22-23 budget. The other $5.3 million that funded the BAL. So we can certainly provide that list of items that was funded on the balance adjustment list through the budget. And then the 14.3 million is basically broken down again on slide 18.
Yeah, slide 18, yeah. And Jerry, I just got it. I think what confused me was when I read the motion and saw the 26, I didn't realize that the 14 was already part of that 26.
Yeah.
So I think that was my error. So thank you very much. And yeah, I actually have my list of the BAL and the 5.3 million. I remember where that comes now. So I'm good.
I know it's a lot of moving parts.
Thank you.
Okay. Thank you very much. I don't see any further requests to speak. So are we ready for the question? I will take that as a yes. All in favor of the motion as presented, please signify by saying aye.
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 All opposed, say nay. Great, thank you very much. Yes, thank you, everybody. We have had our in-camera session. The date of the next meeting is, it has not been determined yet. It'll likely be in March, and we will receive notification of that meeting well in advance, but certainly closer to the meeting date. And so if I could have a motion to adjourn, please. Thank you, Councillor Hensby.
So moved.
We stand adjourned. Thank you very much, everybody. Thank you, Carrie, and thank you, Rebecca.